Good morning and welcome to the Manatee Chamber's webinar on the PPP and new tax provisions that local businesses and nonprofits and employers need to know about. We are thrilled that you're joining us today. We have a large audience for our live webinar, and then we are recording this webinar as well to be able to share it with you if you'd like to go back and revisit any of the information, and also allow members that weren't able to join us live today to be able to access this really useful and important information. So welcome. My name is Jackie Dzelski. I'm the president and CEO of the Manatee Chamber, and we're so glad that you found this topic of interest as we continue to bring resources and credible, reliable information to our membership and the community. Our webinar series would not be possible without the support of our sponsors, and so you'll see their logos up on screen if you're joining us in a way that you can see the video. And we want to thank LaPensie Plumbing, Pools and Air, and Veritas Pest Management for their ongoing annual support that helps make webinars just like this possible. Before I introduce our presenters today, I wanted to remind you of a disclaimer that we've been using frequently as we've brought this technical, financial, and legal information to the community. And that is that the material that you'll hear today and that's being presented by Mauldin Jenkins is based on laws as of today, regulations as of today, and could certainly change in the future. We're actually expecting some announcements from the SBA within days, and I know that Ron and Brian will be sharing that with you. We encourage you to consult the financial professionals and advisors that assist your business as you follow up on information that you hear today. You likely know that the USBA announced that right now we're in the middle of a window in which PPP loans, first draw loans, are really targeted to businesses with fewer than 20 employees, sole proprietors, as well as minority employers. And that is to bring even more access and resources to those populations. So with that, I'm going to advance the slide and give you a short bio of our presenters today. Brian Carter, CPA, will go first, and he is a partner with Mauldin Jenkins. Brian received his BBA in accounting from Mercer University and is licensed as a CPA in both Florida and Georgia. Currently, he's a board member of Pace Center for Girls, the Bishop Museum, as well as the Manatee Chamber of Commerce. Since joining Mauldin Jenkins, Brian specializes in accounting, auditing, tax services for not-for-profit organizations, affordable housing developers, restaurants, construction contractors, manufacturers, and distribution. And so we are thrilled that we'll be hearing from Brian first, but I'll go ahead and introduce Ron Marshall as well, so we don't have to stop mid-presentation to do that. Ron Marshall, also a CPA, is a partner with Mauldin Jenkins. He graduated from the University of Georgia with a BBA in accounting. He and his wife, Allie, live in Macon with their daughters. Since joining Mauldin Jenkins in 2006, Ron has spent the majority of his time working in entrepreneurial services. He focuses on income taxes, closely held businesses with a concentration in professional services, retail, agriculture, construction, manufacturing, and real estate. So we are thrilled to have Brian and Ron with us. And with that, I am going to stop sharing my screen so that Brian can take it away from here.
It is a pleasure to be here today to go over, I'll be doing the PPP stuff, and then Ron will do the other tax provisions. We're going to go through this reasonably quickly to allow enough time for your questions at the end, because I'm sure you are going to have questions. So to start, second draw PPP loans or first draw PPP loans, the last day to apply for these loans is currently March the 31st, so just a few weeks from now. Now, having said that, there's a possibility that that deadline might get extended. You know, if we get to March 31st and there's money left over in the fund that the government's allocated, they might extend that deadline, but I would not plan on that at this time. Plan on getting your application in before March 31st. As Jackie alluded to a few minutes ago, we are in the middle of a 14-day exclusive window that started on the 24th of February and expires at 5 p.m. on March the 9th. So 5 p.m. a week from today for businesses and nonprofits with less than 20 employees. So in this 14-day window, if you have less than 20 employees, this is your exclusive time to apply for the PPP loan. The government funded over $284 billion in this round, which does include $35 billion for first-time loans. The max loan size is $2 million or $10 million if you did the first draw loan. So if you got $9 million the first time around, you could only get $1 million this time. But if you certainly got less than $9 million, then you should be eligible for the full $2 million this time. You're eligible to receive 2.5 times your average monthly payroll costs, which is the same as the first round. And you can actually use the same payroll data for your second loan as you did for your first loan. You don't have to provide new data. You can if you want, but I'm guessing that most businesses' 2020 payroll is less than their 2019 payroll. So you probably want to stick with that 2019 payroll as the basis for your second loan. And as with the first loan, employee salaries are capped at $100,000 for PPP purposes. Now, if you're an organization that has an NAICS code that starts with 72, which is the hospitality group, mostly your restaurants, you are eligible to receive this time 3.5 times your average payroll. Once again, you can still use the 2019 payroll that you previously submitted for your first draw loan, but this time you get a bump up from 2.5 times to 3.5 times. And if you're a sole practitioner, a Schedule C filer, your loan size is 2.5 times the net profit. And that's one of the things Jackie mentioned. There is some data out there on the SBA website that says that President Biden is changing the funding model for these Schedule C borrowers, the sole practitioners, the independent contractors. But as of today, as of this morning, they have not released what that new funding model is. So technically right now it's still net profit, not gross revenue. The farmers, they use gross revenue. So there's a lot of chatter out there that they're going to use that same model, gross revenue, for the independent contractors, the Schedule C sole practitioners. But as of right now, they have not fully implemented that. So it's kind of a wait and see if you're in that category. But worst case scenario, 2.5 times your net profit. You can have your loans forgiven. We'll talk about that more in a slide here in a minute. And with the new period, you can select anywhere between 8 and 24 weeks for your forgiveness period. And you have to spend no less than 60% of it on payroll. Is your business eligible? Small businesses, 500 employees or less, that meet the qualifications of the first program. And if you're in the hospitality group, the NAICS codes with 72, that's 500 employees or less per location. 501c3 organizations, sole practitioners, independent contractors, and then new for this round, 501c6s, which is kind of your chambers and your trade associations. If those organizations have less than 300 employees and they receive less than 15% of their total receipts from lobbying activities. And notice that's receipts, not expenses. So they did allow the trade organizations and the chambers of the world to apply this time. So the second draw loan of up to $2 million, you must have used or will use your initial PPP loan in full prior to the disbursement date of your second draw loan. Note that it does not say have your loan forgiven. So that's a key feature. If you haven't applied for forgiveness yet on your first loan and you're otherwise qualified for a second loan, don't wait. Go ahead and apply. You do not have to have that first loan forgiven. You just have to have spent all the money by the time you get the second loan. Once again, have 300 employees or less and show a calendar quarterly gross receipt reduction of at least 25% in comparison to the same quarter in 2019. And that's just for quarters. You can use either quarter 2, quarter 3, or quarter 4 of 2020 in comparison to 2019. You can't be an ineligible business, which is anybody that's not other types of nonprofits that aren't C6s or C3s or certain types of political organizations. You can't be involved primarily in political activities. As an alternative to the quarterly comparison, if you don't want to use Q2 2020 versus Q2 2019 or something like that, you can use calendar 19 and calendar 2020 tax returns and show that if you have a 25% reduction in gross revenue there, then you can use that. But my guess is that most people right now don't have their 2020 tax returns completed. So once again, in the interest of time and meeting that March 31st deadline, I would go ahead and use those quarterly calculations from your, whether it's QuickBooks or whatever accounting system you're using to show that 25% reduction. Expenses that are eligible for forgiveness. Once again, I said 60% of it must be spent on payroll. The other 40% includes the following: mortgage obligations, rent obligations, utility payments. Those are the same allowable expenses from the first round, but then this time they added operation expenditures, property damage costs, supplier costs, and worker protection expenditures. So basically, in a nutshell, that's pretty much anything that you've got in your business is eligible for that other 40%. So they've really expanded the expenses allowed for forgiveness. So there really isn't, you should be able to get full forgiveness on this new round of loans. FTE and wage reductions. Just like the first time, you may be subject to a reduction in your forgiveness if you've reduced the average number of full-time equivalent employees during the covered period, or if you've reduced wages by more than 25%. There are a few exceptions to the reduction in full-time equivalents. You know, for example, if you fire someone for cause, if you catch them stealing and you fire them, you know, that's not going to count against you. If you temporarily furloughed some employees due to lack of work due to the COVID crisis, and you offered to bring them back and they refuse to come back, you're not penalized for that either. So there are some exceptions to those reductions. The Act also clarifies that the deadline for restoring either the full-time equivalent number or the wages reduced by more than 25% is the last day of the covered period for your loan. So for example, if let's just say you got a loan on March the 1st, you got your loan yesterday, and you select 24 weeks, so that's effectively 6 months. You've got till the end of August to restore the full-time equivalents and any salary reductions you made over those amounts in order to achieve full forgiveness. The revenue definition. So for purposes of computing the 25% reduction, it's a 25% reduction in gross revenue quarter over quarter. And in this here, I'll just read it. Gross receipts for this purpose includes all revenue in whatever form received or accrued in accordance with your entity's accounting method. Most of you probably are cash basis, but if you're on an accrual basis, it would be accrual revenue. From whatever source, including from the sales of products or services, interest, dividends, rents, royalties, fees, commissions, reduced by any returns or allowances. Note at the bottom, it does exclude any PPP forgiveness income from round one. So that does not count in terms of the 25% comparison reduction. So in a nutshell, it's basically all revenue, with the exception of your PPP forgiveness. In this second round, there's a new form. It's the Loan Necessity Questionnaire. For for-profit businesses, it's Form 3509, and for nonprofit businesses, it's Form 3510. It's a fairly simple, straightforward, couple-page questionnaire where you will assert to the government that you, in fact, need this loan to continue operations and to keep your employees paid. So it's pretty straightforward, but you will have to fill that out this time around. I encourage you to maintain your documentation to support your forgivable expenses, both for the forgiveness application and for the potential for any audit on the back end over the next year or so. You can see here the audit rules as they apply. We won't get into that too much. You can Google SBA.gov PPP to find the latest data on both first round and second round. I'll just skip through. But when can you apply? We said this at the front end. I'm going to say it at the back end again here. Apply now. If you've not applied yet, you have until March the 31st to apply. Don't wait. Don't bank on an extension past that date. Don't bank on the government having the money there. Apply as soon as you can. And a nice feature that Congress did for us at the end of December, right after Christmas, the loan forgiveness income was always meant to be exempt from taxation and not taxable income. But then Congress allowed the expenses that you use that loan money for to also be deductible. So essentially, it's a double dip on your tax return. You don't have to claim the income, and then you can actually deduct the expenses that you use that income to pay. So it really is a double dip. So they fixed that little problem at the end of December. Simplified forgiveness. Borrowers with covered loans of up to $150,000 will have a new one-page forgiveness form to complete. I talked to a banker friend of mine just yesterday. I think the SBA is going to release that form. I think it's either the 5th or the 6th. So later this week, it should be out. That new form will have a description of the number of employees that you were able to retain as a result of the loan, the estimated total amount of the loan that you spent on payroll, and the total loan amount. So if you think about these loans of up to $150,000 and you do the 2.5 times, you're getting a loan of 2.5 times your payroll. That's businesses with payroll of just say 700,000 and less a year. So that's a lot of businesses in our area. So the simplified forgiveness form will be a really good thing. That is the end of the PPP stuff. I'm going to stop sharing my screen and turn it over to my colleague Ron for the rest of it.
Thank you, Brian, for that. As you know, that bill, this what we call the CAA, the Consolidated Appropriations Act, that came out at the end of December. PPP was a large piece of the second round of PPP was a large piece of that, but that bill was over 5,000 pages, so there was more in there than that. I still haven't gotten all the way through it. I'm just kidding. I'm not even going to try, but there were some other provisions in there other than the PPP. There was also a bunch of stuff that, doesn't even apply to tax or, loan payments or anything. But I'm going to go over a few of the tax items that were also included in there. And so we'll start going through there. This first one is there was a little bit on the Families First Coronavirus Response Act. This was the very first thing that came out once we hit the pandemic hit. This is the law that kind of made you have people have to be out from work because they had either had COVID or had family members with COVID and all that. You had to let them out and had to pay them for their wages while they were out. This law was, like I said, was even before the first PPP or the first stimulus or anything. They haven't changed the rules of this, of how it works and how you get this credit. Basically what happens, you get a credit for those wages you paid to those sick employees on your payroll tax returns, on your 941s. That hasn't changed with this, the new CAA Act. That's still done the same. The only thing that really changed was they extended the time to get the credit through March 31st now. So if you have people out now, you can still get the credit. The only other thing they changed was that you don't have to do this anymore. So if you have employees out now, you don't have to pay them under this bill. Now they can have regular sick leave or something like that. You don't have to do it anymore, but if you do, you can still get the credit through March 31st, 2021. So but all the rest of the rules of this are basically the same as it was all year long. It's just those two little caveats were included in this newest act. So moving on from that, another item that was in there was the recovery rebate, another stimulus. And those have, hopefully been paid out. But those payments now this time were $600 per taxpayer, $1,200 for married filing joint, and then $600 for qualifying child. What they did on this stimulus, as most of you probably know by now, they did reduce the phase out. It starts phasing out at $75,000 of adjusted gross income for single taxpayers and $87,000. They're fully phased out, and then for married filing joint, they start phasing out at $150 and fully phased out at $174,000, which that was down from the first stimulus received back in early 2020, they weren't fully phased out until $100,000 for single and $200,000, excuse me, for married filing joint. So that changed a little bit. And now, I said, most people have seen there's talks of a third rebate in Congress now. we don't know the rules yet. They think it's going to be something similar to these, except, you know, it's going to be $1,400 per taxpayer and $1,400 per child on this one. But that is still out in Congress, so that we don't have anything on that concrete yet. And I'll touch a little bit on this now that I've started to see this as I've been doing tax returns this year. You know, a lot of people ask the questions, well, what happens if I got a child, or, you know, what happens if my 2020 income was way down and I would have gotten more credit? Basically, on your 2020 tax return, you figure the credit based on that 2020 income, including new children, all of that. And if it's more than what you actually received, you will get that on your tax return as part of your refund, or reduce your tax liability. Now, and the opposite works if your 2020 income was higher than 2019 and actually would have reduced your credit, you don't get penalized for getting too much. You get to keep what you got based off the 2019. So that's a nice thing. And I've definitely had a few situations where people, you know, had children or something like that, where they get a little bit extra once we actually file their 2020 return. So that's not really on the slide, but I did want to point that out. All right, now I'm going to go, another little item that was in there was, if you recall, you know, under President Trump, that the Social Security taxes from employees' checks, you could defer those. At the end, you know, from 9/1 to 12/31, you could defer those. Now, that didn't mean you didn't have to pay them. The employee was then going to be responsible for them in the first quarter of 2021. This act at the end of December kept that the same. They're still responsible if you did defer those employees' payroll taxes, Social Security taxes, then they're still due. They still have to pay those back, but now they can pay that back just before the end of the year. You know, you were going to have to do it by March 31st originally, but now you have until December 31st to get those deferred Social Security taxes paid back in. So that helped for people that did that. I know I had a lot of employees or employers that ended up not doing it because it was going to you know, it wasn't really going to be a long-term help for their employees, since they had to pay it back so soon in 2021. But now if they did do it, now they have longer to pay that back. But of course, this didn't come out to the end of December, so it's not like people could go back that didn't do it. But that is for the people that did go and do this, gives them a little bit more time to pay those back. And now they will, if you don't pay those back, employers are still liable to collect and get those paid back. So if you have somebody that you did this for and they're leaving, you need to make sure they pay those back on their final check. Because if you can't get it, the IRS can't get it from them, they will come after the employer. And then if it's not paid back by the end of the year, penalties and interest will start to accrue in January 1st, 2022. Here's some other tax issues that the CAA, we're including the CAA. As you all know, restaurants have had a tough time during this deal. So to try to stimulate people going back to their restaurants, now they are allowing 100% deduction for business meals in 2021. So as you know, most of you know, for years and years and years, you normally just get a 50% deduction on those business meals. But for 2021, to stimulate people going back to the restaurants, you can get 100% deduction on business meals, qualified business meals. Now that'll go back to 50% after this year, but there is that year to get that to hopefully help stimulate the economy for the restaurants. Another item included in there was that at first, the banks were going to have to send 1099s for everybody that got the PPP loans. They came back and said no, since they're non-taxable, they're not going to make the banks send those. So there's not going to be any kind of reporting, you know, mandatory reporting process for that. So that was good news for the lenders. So that they took that away. And Brian already went over this last point here. But you know, they changed the PPP forgiveness to allow those expenses to be deductible. For most of the year, we were IRS has ruled that was going to be non-deductible expenses, but then at the end of the year, they were able to do what Congress originally intended and allow those expenses to be forgiven and the debt relief payment to be non-taxable. So that was nice. And a few more small items. For 2020 and 2021, charitable contributions are allowed to be deducted up to 100% of their AGI. Normally, they're only allowed up to 60%. So say, for example, if you have 100,000 of adjusted gross income and you contributed $80,000 to a charity, you would only be able to deduct previously 60,000 of that $80,000 deduction because it's limited to 60% of your income, and the other 20 would be carried forward to a future year. But now they have said that you can go ahead and deduct up to 100% of your income to charitable for those itemizers for 20 and 2021. Now, if you don't itemize, as you know, a lot of people under the new the Tax Act that came out in 2018, they raised the standard deduction very high, and a lot of people now don't itemize their deductions anymore even if they used to, because that the deduction now is over $12,000 for single taxpayers and over $24,000 is, I think it's $24,500 this year for 2020. A lot of people aren't doing that anymore. They're taking the standard deduction. What they're allowing for 20 and 21, if you are taking the standard deduction and you still give money to charities, you can take a $300 deduction on top of your standard deduction. It's considered above the line. It doesn't really go, it's on a different part of the tax return, but it's basically an addition to your standard deduction of $300. Now for 2020, it's a $300 max, even for married filing joint. For 2021, if you meet the same situation, you'll actually get to take up to $600, $300 per person if you're married filing joint, above the line, up and above the standard deduction. So that's a nice little item included there to help out the charities. Also changed here was the medical expense deduction. It has been at 7.5% of AGI for a number of years. What this means is you have a floor of your adjusted gross income. So again, to take medical expenses. So again, in a $100,000 situation of income, you can only take medical expenses above $7,500, which is 7.5% of that $100,000. You'd only get the deductions above that amount. That was actually set to rise to 10% in 2021. So then that floor would be $10,000 on $100,000. So it would have risen another 2.5%. They decided to lower that back to the normal 7.5% that has been for years and made that permanent. So that's permanent from now until somebody changes it down the road. But for now, it is permanent. Another item that they extended, this was in the CARES Act, it allowed employers to pay up to $5,250 of student loans for their employees and take a deduction, and it would not be income to those employees. That was set to expire at the end of 2020. That was just a one-time thing under the CARES Act. This new CAA bill extended that through 2025. So employers can pay up to $5,250 per employee annually on their student loans and get a deduction for that on their business tax return. And then the employee does not have to pick that up as income. So that's a nice thing. Another item that was extended, that was set to go away at the end of 2020 was if you had mortgage debt that on your permanent residence or primary residence, excuse me, you got foreclosed on or had discharged mortgage debt on that, you could actually not include up to $2 million of that as income. Normally, if you have a debt extinguished, that becomes income to you. But for primary residence and you have a foreclosure deal, you can exclude up to $2 million of that from gross income. And like I said, that's been around for a little while, but it's set to expire at the end of 2020, and they've extended that through 2025. And one last item that I thought was interesting, that a lot of employees have these flexible spending accounts, and these were things that, you can use for medical deductions, child care. These things are really nice to use, but they have to be spent before the end of the year. Use it or lose it deal. For 2020, you could now roll those amounts, any amounts left over there, over, and you can also do it for 2021. So if you have put money in these accounts, you don't spend it all, you no longer lose it. You can actually carry it over up to 2022. Now, starting in 2022, it will go back to the old rules where in 2022 you will have to spend it before the end of the year, unless they change that down the road. All right, well, that's all I had. I know we went through that fairly quickly, but we wanted to leave time for questions, so I'm going to stop sharing and let Brian get back on, and we can go from there.
Thank you so much, Brian and Ron. And I know that we've got several questions that have been submitted. So again, to all of our attendees, if you have a question for either Ron or Brian, you can use the Q&A feature. So I'll go ahead and read off the questions. So the first is regarding the Schedule C. Brian, from your presentation section, should I wait until the new model or apply now during this exclusive 2 weeks? I don't get much if it's based on net profit. I would really benefit if it was based on gross revenues. So, knowing it's a judgment call, what do you advise?
To me, the old adage, a bird in the hand is worth more than two in the bush. I would go ahead and apply, but be in conversations with your banker, about that pending change. It's going to take, once you apply, it's going to take, a week or so or more to go through the approval process and get funded. And, President Biden has thrown the data out there that he's going to change the funding model. Just don't know when. So I would certainly apply now, be in conversations with your banker, and take what you can get. And I was talking to a colleague last night. There is a little chatter that, they may retroactively change that backward. But once again, I wouldn't hold my breath on it until it happens, but that just kind of bolsters the point to go ahead and apply now and not to wait.
Yeah, and that was a follow-up question that came in is, a prediction at all as to if you went ahead and already applied and received based on net profit, do you think there'll be an opportunity to go back and either apply again to base it on net revenue or what? So I think again, it's projection at this point, but it sounds like maybe there'll be a remedy considered. All right, next question. Regarding deductions, is medical marijuana cost deductible in Florida as part of medical there in Ron, probably in your section?
Brian, I'm not sure about Florida. I am in Georgia. I don't believe it is in Georgia.
I can look, Jackie, send that one to me after the fact, and I'll look that specific up.
Okay.
And get you an answer. I don't know off the top of my head.
Okay, we will do that. Another question regarding PPP. Any indication as you've watched clients apply for forgiveness as to how quickly they hear about forgiveness?
So it's kind of it varies. I go back, several months, back to say October, November timeframe. It was happening fairly quickly. The banks were taking, a week. SBA was turning them around a week or so after that. It slowed down a little bit, but it's still not, by statute, the bank has 60 days and the SBA has 90 days. So you're talking 5 months total. By no means is it taking that long. It's, maybe taking, it slowed down a little bit around the end of the year for the holidays. It slowed down a little bit around the inauguration, from a changeover in administrations. But I'd say it's probably running no more than a month. I mean, Ron, are you seeing anything different?
No, that's what I'm saying now. Some of the larger loans are taking a little longer, like you said, but yeah, overall pretty, about no longer than a month or so.
If you're over a 2 million loan, it probably it's got a little more scrutiny involved. But if you're under a loan of 2 million, I think a month max is probably what it's taking.
And a lot of it depends on the banks. I mean, sometimes the banks are reviewing it before they even submit it to the SBA. So some banks are holding it for a time period and then submitting. But once it gets to the SBA, I've usually seen about a month or at the most. You know, they only have what is it, 60 days or 90 days?
90.
Not yeah, to have to do it. But I have seen some local banks take a little longer before they submit it. That causes a little, you know, back up. But normally once it gets to the SBA, it's less than a month.
All right. A follow-up related to that is for loan receipts. When you receive that PPP loan revenue in your bank account, any suggestions or advice on setting yourself up for success with regards to forgiveness and documenting that? I know that some businesses have said they've been advised to set up a separate bank account to move those loan receipts into, and then to as they're paying rent, mortgages, payroll, to move the money between as one way to document. But I've also heard that some lenders have a template that they are sending to their clients to start the documentation from the beginning. What are you seeing with your clients?
It's literally a mix of all of that. I mean, obviously, if you set up a separate bank account and have the loan proceeds deposited there and spend the money out of that bank account, obviously that's very clean. But I certainly don't think it's necessary or mandatory. At the end of the day, especially in this next wave, with a 24-week forgiveness period, and your payroll being based off 2.5 months or 10 weeks worth of payroll, as long as you have your employees and you're paying your employees, there's no reason why that just through the normal payroll process, you can't achieve that forgiveness in well under the 24 weeks just using payroll. In this second round, there's so many, I mean, like I said, basically any expense qualifies, but just on payroll alone, as long as you're paying your people and you've got a payroll service or doing your internal payroll and have those payroll reports to support the expenditure, it should be a pretty safe process for forgiveness.
Okay, thank you. Some more from the Q&A with regards to the PPP. Kind of going back to maybe your earliest slides, Brian, this is appropriate for self-employed with no employees, correct?
Correct.
And are you seeing success with big banks, small banks, and credit unions in helping the smallest of businesses right now?
Yes. I mean, I'm sure Ron will agree. We've got clients that use the Bank of America, the Wells Fargos of the world, all the way down to the local community banks. I actually there's one credit union, here locally that I've got, 3 clients that use that credit union. They've been very helpful as well. So it's pretty much across the board. All the banks are participating or being helpful.
I would agree. Some have different ways to submit information through the portal, different portals, and that may look a little different, but they're all participating for the most part. I don't know any off the top of my head that aren't, and I have even a couple credit unions here that are doing it as well.
Now, I guess the one caveat would be if you got your first loan, I'm just going to throw banks out there. If you got your first loan through Bank of America, Wells Fargo is probably not going to do your second loan. You probably need to go back to Bank of America. So you probably can't switch banks in the midstream. But other than that one little small caveat, I think you should be fine.
Well, I wouldn't suggest switching because they basically already have your information stuff. But we have had a couple that have switched because during this, either they had an issue with the first round where their bank didn't live up to the expectations they were expecting, and they ended up moving their money completely because of it, that they switched and they hadn't had a problem.
Okay.
But on the most part, I would agree. If you used the first bank and it went well, they already had the information, you should use them again.
Thank you. And a follow-up question from the same attendee here this morning, templates or samples available. I know that I've seen the banks have their own portals. So in thinking about how a first-time PPP applicant would be preparing right now to take advantage of this window, is it true that the lender will have the template and for you to enter all that information, or just any ideas to share? Again, knowing that the smallest of businesses likely don't have a finance or accounting professional on staff, so they're really going to rely on their lender, I would imagine, for the right documentation.
Yeah, I've not run across any bank here locally that doesn't have an online portal, online templates that just literally the banker will send you a link to a site that's your own private secure site where you'll enter your own information and upload the information, and it's all electronic, all seamless, and it should work relatively easily. Now, if you've got those Schedule C sole practitioner filers right now that are just working off net profit, you've got your tax return already, so that's pretty much your document that they're going to use. But yeah, the banks, they're all similar, but they're all online portals at this point, both for the application and the forgiveness side.
And I agree with that. That's what I've seen from up this way too.
Great. Thanks both Ron and Brian. And I know that the Chamber has given out hundreds of referrals to local lenders that are members of the Chamber that are processing PPP. And so I see we've got some of our attendees, our bankers today, and they're putting information in about their contact information. So if any of the attendees today need some referrals to local Chamber member lenders, we're happy to do that, and appreciate the bankers that are on with us today throwing your information up there in the Q&A. So just trying to group them together as best I can. Question came in, or situation. I have a micro business LLC, self-employed Schedule C. I want to apply for a first draw during this 2-week window. They mention who their banking relationship is with, and they say each time their application attempt is made, they receive an error message. They're unable to submit. They haven't been able to get a response. So knowing time is of the essence, assume they should try another lender?
I would say yes. I mean, I guess I personally have not run into that. So I would suggest reaching out to, hopefully they've reached out to their individual banker, that individual person, to see if that individual can help in the process. If not, yes, potentially another institution, or I'm assuming that they have someone like myself or Ron that's helping them with their tax return, maybe reaching out to that person to see if they can assist as well.
I would agree. I would at least try, if you have whoever your contact is for your where your cash accounts are there or whatever, I would at least try that relationship first and try to get them to help you. And if you don't have any luck, then I think moving is the best idea.
Thank you. Question: if my business didn't earn much in 2019 and 2022 or 2020, but my 1098 payments in the same field from working for another business fell, in this example, 40,000 in 2019 down to 10,000 in 2020, can I use that? If that question makes sense to you. I'm reading it, not being an accountant or a banker.
I'm gonna say, send us that one offline and I'll read it and study it and get an answer back.
Great. I don't have a name or a business associated with that question, so whomever submitted that, if you could email that to the Chamber, Brian or Ron will follow up with you on that. I just won't be able to, at this point, know who it is that asked that question. Switching gears to Ron's presentation, one of the attendees was wondering what's considered a qualified restaurant purchase as far as moving that deductibility to 100%.
Yes, a qualified business meal is anytime it needs to be with another person that when you're conducting some sort of business, and you need to document that with a receipt and who was there, and it can't be extravagant, but I mean, it can be a normal business meal. I mean, but and it can be dinner or whatever you know, obviously those prices are a little higher, and that's fine, but it does need to be you need to document the business purpose of the meal, and who else was there as your documentation. But that would qualify as long as it's for a business purpose.
Thank you. Switching gears again to the County CARES Act grants, if you've got any insight on this. The question is, I received one of the Manatee County or Sarasota County CARES Act grants. Should that be reported as income on my Schedule C or Schedule 1 for the 1040?
Yes. That's different from the PPP funds, where the PPP income is obviously excludable. But the CARES Act money that the county gave out is includable in income. If you think about what that payment was for, you know, you had $5,000, up to $5,000 for the reimbursement of PPE expenses, and up to $45,000 for demonstrated losses. So, you know, you've essentially incurred the expense and you're deducting those expenses. So you're getting reimbursed for those expenses. So yeah, that money is includable in income.
All right. I see someone asked if we'll be sending a link out so they can let this all sink in and go back and rewatch. And the answer is yes on that. So appreciate Ron and Brian allowing us to video this, to record it. You'll have access to the slides and their commentary after the fact. So we will absolutely get that to you. Another follow-up question on that CARES Act. The CARES Act is includable, but which form should be used to show the income was the question. So I apologize if I didn't read it in a way that made that point. Which form?
If you're a Schedule C filer, it just goes as you know, gross receipts or other income or whatever on your Schedule C.
The same way if it's a partnership, it would go on the partnership return. It would just be whatever they normally file their normal business items. That's where it would go.
Yeah.
As a follow-up, since the County CARES Act grant was brought up in this line of questioning, hopefully you all attendees have heard that in Manatee County, they reopened the CARES Act grants for nonprofits today, this morning. That window is a very short one for this round. It will be open until Friday, and it's very targeted as well. It's up to $5,000 for nonprofits that have incurred expenses related to opening safely, PPE, as well as targeted grants for those that are in food distribution. So helping those who are insecure with food at this point. So take a look at that. We also received word that the small business grants in Manatee County through the CARES Act will be reopening as well. We will send out in our follow-up a link to Manatee County's CARES Act site. Again, it's going to be targeted as well as a short window, given that the extension to approve those grants and get the money out the door is only through the end of this month. So it's just a few weeks, and certainly we appreciate Manatee County for making the commitment to get as much of that federal money drawn down here into our local community. Again, those small business grants, my understanding at this point, again, very targeted, to cover up to $5,000 to reimburse expenses related to opening safely, PPE related supplies and sanitization and all of that for your businesses. There is also currently rental assistance as well as mortgage assistance programs available. The mortgage assistance will reopen in a couple of weeks. All of this, the Chamber will share via our communications vehicles, including email and our social media as well. So while I've been chit-chatting with you all on the County CARES Act, a couple more questions have come in here to wrap it up. So question, is there a maximum for a solo owner with regards to the PPP loans?
So right now, today, the maximum would be limited to your net profit as shown on your Schedule C of your 1040 or whatever tax return you're filing. There is talk of the sole practitioner independent contractor scenario going to a gross revenue model. So the max would be your gross revenue up to $2 million. But as of, right this second, that has not been formalized and rolled out. So right now, today, it's your net profit as shown on your Schedule C would be the maximum. So if you had a loss on that, then unfortunately you would not be eligible But if they do switch to a gross revenue model, then you would have some availability there.
All right. Well, no additional questions have popped into the Q&A, so y'all handled that rapid fire extraordinarily well. Brian Carter, Ron Marshall, Mauldin and Jenkins, thank you so much for sharing this really important, timely information with the Manatee County business community. We appreciate it. Follow-up will come to all of our attendees. We'll certainly let you know when the link is available for you to rewatch today's webinar, as well as some follow-up with a few of you regarding some of the questions we weren't able to get a definitive answer for you on. That one that came in anonymously, I still haven't seen a name attached, but if you'd like to email us here at the Chamber, we'll connect you with Brian or Ron for some follow-up. So with that, thank you so much to our sponsors, LaPensie Plumbing, Pools and Air, as well as Veritas Pest Management. Thank you so much to our Chamber members for your ongoing support and encouragement as we look to bring pertinent, relevant information to you at a time when we still are so focused on fully recovering here in our region. Have a great afternoon. Let the Chamber know what you need. Have a good one.
Thank you.
Thank you.